Good morning. Welcome to Stock Market Today for Friday, April 24th, 2020. And I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show. Also gives you daily stock ideas to consider upon further research. Hits your inbox every trading day before the market opens. So U.S. equities finished mixed in Thursday's trading, with the S&P 500 giving up early gains to close near the lows of the day. Treasuries were a little changed to stronger, with the curve flattening. Dollar was mixed on the major crosses. Gold was up 40 basis points. WTI crude settled up 19.7% after jumping nearly 20% on Wednesday. As we get to the desk this morning, futures have a bit of a bid to them, up about 0.5% to kick us off on Friday's trading. Asian equities were mostly lower overnight, with China and South Korea underperforming. European markets are lower as well. Treasuries are a little changed. The dollar is stronger on the major crosses. Gold is up 40 basis points. WTI crude giving some back, down 1.6% on Friday morning. So for the S&P 500, an early rally fades into the close of trading. We've been highlighting, yesterday we highlighted, and today we highlighted again, this resistance zone, right? Call it between 2850 and 2900 or so. Coincides with the downward sloping 50-day moving average, which thus far has acted as resistance. Now, overbought, oversold. The 13-period CCI is leaving overbought conditions. Chaikin money flow is bullish, but fading. On the downside, should this morph into further downside, 2730's initial support that held earlier this week. Below that, 2450 to 2600 holds the key retracement levels of this move off the March 23rd low into the highs from last week. So those are the levels to keep in mind and to keep an eye on as we grind through the final trading day of the week. Resistance very much in play for the time being, as we've been saying for the majority of this week. Now, our market in a minute. What are we writing about today? Resistance in the 280-290 zone continues to hold for the SPY. We just touched on that. And what's interesting is that for all the back and forth, for all the drama, right, it's been a stressful couple of months. S&P 500 actually has just been pretty much flat over the past 2 weeks. Key themes remain mostly risk off, but watch the divergences in growth. We'll take a look at that a little bit later on in the show. We're going to take a look at pharmaceuticals, our leadership, and they're leading the healthcare sector. And futures, as I said, do point to a higher open here today. Remember, we talked about pharma last week, and that continues to be the case. But watch that group with Gilead now. Our major indices now, from a power bar perspective, Dow added 12 basis points, 3 to 10 bulls to bears there. S&P 500 down 3 basis points, 33 to 157 bulls to bears. NASDAQ was a slight underperformer on the day, 18 to 23 for the ratio in that group. Small caps outperformed, up a little over 1%, 173 to 380, so still very much skewed in favor of the bears. Bonds uptick, sending yields lower. Energy had a big day, with oil rallying nearly 20%. We've kind of I've kind of given you my thoughts on energy for the time being. And in the near term, it's something that I'm watching closely as the stocks don't crater any longer on what has been a horrendous week for crude oil. According to the Chaikin Power Bar, small cap stocks and large cap stocks remain bearish. Let's dive into our stock of the day now. It's a stock that I'm highlighting in my note today because, quite frankly, you haven't seen a lot of oversold stocks. The market staying as overbought as has been. Kind of the bullish stocks that are out there have also predominantly been overbought. But here's an interesting chart that I came across today. It's Ciena Corporation. CIEN is the ticker symbol there. Has a bullish Chaikin Power Gauge rating. Strong trend, strong industry group as the stock trades above a rising 200-day moving average. Chaikin money flow has been bullish since late February, early March. Stock's been outperforming since the end of January, and actually saw its relative strength increase as the market sold off. So that always kind of piques my interest. Kind of at an interesting level here, with some clearly defined risk ranges based on price-based support. I think that if you can get a breakout through $47, that's interesting, but the stock is actually oversold here. So I can't argue with keeping an eye on Ciena here. in the near term. I can't argue with it as a bullish idea. I mean, this is an interesting looking chart to me with clearly defined parameters around which you can take action. So take a look at Sienna today as a potential bullish idea. It's my stock of the day. It's a note that I'm highlighting, stock that I'm highlighting rather in my note to Chaikin Analytics clients, and I wanted to call it out here on the show today. Taking a look at our sector tracker now. Movement of the major sectors over the last 5 days. There's energy at the top of the list again. All right, we've kind of hit that. We've hit that horse quite a bit, and you know how I feel there. It's something that I'm now intrigued by. I'm watching it. I have to wonder how many other people are watching it. It's probably on a lot of radar screens this week, but quite frankly, the carnage in energy has pushed it to a less than 3% weight in the S&P 500. So in that regard, it starts to become less and less important. Materials, industrials, and financials round out the top 4 groups. Discretionary comms and healthcare are also positive over the last 5 days. Taking a look now at the losers over the past week of trading: utilities, tech, REITs, and staples. So a little bit of an interesting dynamic in the groups that had been solid leadership leading into the downturn and throughout the majority of the downturn, or maybe giving some back, a little bit of profit taking there in those groups. Definitely something worth keeping an eye on to see if it morphs into a bigger trend. But for now, we are intently watching is the best way to kind of highlight that. Our industry in focus today: telecom services. Been an outperformer over the past 6 months, leading the S&P 500 by nearly 4%. And it actually has a strong power bar ratio. 7 bulls to 6 bears gets that a spot of number 5 of the 21 subsectors that we watch, having moved up 2 slots over the past week. So some indicative names there that might be worth further analysis: Adtran, ADTN, with a very bullish rating, US Cellular, USM, with a bullish rating, and Orbcom, ORBC, also has a bullish Chaikin power gauge rating. And if we take a look at the XTL, the ETF that we're using to track this group, we can see it has a bullish ETF rating, is in a strong trend above the long-term trend line. There's your ratio at 7 to 6. Approaching oversold conditions as it's been outperforming as the markets rallied. So this one, started to see improvements in its relative strength through February and the first half of March, and then essentially had a relative strength break to the top side as the market has rallied. Chaikin money flow has shifted from bearish to bullish. So we have a bullish fund outperforming with bullish money flow and approaching oversold conditions. That's an interesting dynamic. Now, price-based resistance certainly comes into play, but it's definitely a group that's worth keeping an eye on here over the next few days and maybe the next week or so of trading. See if we get further upside as it now enters an oversold condition based on our indicators. So keep an eye on the telecom services space for over the next few days here. Let's take a look at what's trending. Yesterday's movers are gainers and losers. Las Vegas Sands, LVS, announced earnings yesterday and had some positive commentary around Macau, which sent that stock higher by about 12% on the day. APA, still a very bearish stock, but part of that energy complex that has held up of late, right? Up 11.5% yesterday. Didn't see a ton of company-specific news, but oil, as I said, was up nearly 20%. Old Dominion, ODFL, up 10% following their earnings announcement. ADS up 10% on the heels of their report. And Live Nation, some asset swaps with Liberty. Investors like what they heard there, apparently. Stock up 8.5% on the day. Still a very bearish stock at Chaikin Analytics. So obviously the companies, though, are taking some action in and around what is a tough environment for these lodging leisure type names, and Live Nation certainly falls into that group. Our loser side of the board: IBS, earnings and a dividend cut take 21% out of the stock. And then to add insult to injury, it gets downgraded here this morning. Citrix earnings, one of the higher flyer names in the software space, down 6.68% following their report. FTI down 6.6%. Nothing company specific that I could see driving trading there. GWW in the same group as Old Dominion, but GWW here. I apologize, not the same group. GWW down 6.4% following their earnings announcement. And Seagate, STX, announces their earnings and the stock dives 5.6%, continues with a very bearish rating here at Chaikin Analytics. So those are our movers and shakers. Let's go into the key themes here because it's actually a little bit of an interesting dynamic that I've noticed in my work here over the past couple of weeks as it relates to the growth theme or lack thereof in the economy, as it relates to the growth dynamic, as it relates to growth and value. So here's the copper to gold ratio that we watch to gauge investor expectations of global growth. And what we can see is a clear downtrend, right? Let's start there. Still very much in a downtrend, below a declining 200-day moving average for the ratio. However, notice how the most recent lows actually were met with higher lows for the RSI, which on the most recent low didn't even produce an oversold condition. That's a bullish divergence that we want to now be paying attention to and look for confirmation. Okay, it's kind of an interesting dynamic, similar to what we're seeing as well in small caps on a relative basis. There's a bullish divergence in play there as well, which you can see in my note if you read it here this morning. But to me, this is a sign that downside momentum could be waning, right? Something similar took place back here in September before we had a counter trend rally. Weight of the evidence is still to the downside, but we want to be paying attention to these divergences because, you know, once they're confirmed, it could signal a near-term change of trend. And what's interesting to me, what does that mean? What does that mean for broader markets? Well, that divergence in the copper to gold ratio is playing out as the 10-year yield, look at the bottom of the chart, seems to have found a bit of a floor here around 0.6% in the near term, right? Again, still a trend that's very much to the downside, but we want to be paying attention to potential shifts, try to make you aware of them as early as possible. And then you can start to think about, all right, if this trend reverses and yields start to move higher, what does that mean for the equity market, right? It's an intermarket approach. We're watching commodities. We're watching fixed income, trying to read their message for what it could mean for equity markets. So just something that I am keeping an eye on here, right? And if you take a look again in equity markets, here's that growth value dynamic, one that we've been all over for a long time. S&P 500 growth over S&P 500 value growth, clearly an outperformer, but notice the divergence that's in play. Notice the divergence that's in play here as well. The ratio made a new high above the 200-day moving average, a lower high for the RSI, right? Creating that negative divergence, coinciding with the relative performance of the Qs against the SPY, hitting its head on resistance here a little bit and beginning to fade. So again, divergences are not a signal, they await confirmation, but you want to be aware of them. You want to see how they're playing out. You want to just kind of know, you have to have this on your radar screen so that if these relationships do start to turn and break above or below key levels, then you know that it's a confirmation and it makes sense to start to take some sort of action. So we're watching these closely. Something else that we're watching closely as well is the breakout in the gold miners. The GDX, the Van Eck Vectors Gold Miners ETF, ticker symbol GDX. After being in a consolidation and then seeing a ton of volatility with the rest of the market throughout the back half of February and most of March, we have now broken topside through key resistance in the $31, $32 range. Now a bit of a reversal, same as the market yesterday, right? So we want to watch this here, a potential, if you are a candlestick person, a potential shooting star up there. But I think as long as we're above this 31, 32 range, that's bullish for GDX. Now it is overbought, the 13-period CCI overbought, but check it out on a relative basis, a solid breakout bolting to the upside, GDX relative to the S&P 500. And if we take a look at it from a Chaikin Analytics perspective, GDX does have a very bullish ETF power gauge rating. So that's something that's certainly on my radar screen above the moving averages as well. That's going to wrap us up for today. Head over to chaikinanalytics.com/test drive. Sign up for a free 14-day trial. Hope everybody has a great weekend. Stay well, stay healthy, and I'll be back on Monday.